eBay is interesting because, in hindsight, it's an obvious venture investment. But at the inception of the internet, it was a very non consensus one. In fact, Benchmark was the only venture capital firm to give the eBay team a term sheet. The only other option on the table was to sell eBay to a newspaper company, a newspaper company for $50 million, which the founder, Pierre Omidyar, wisely, wisely turned down. I can't imagine today a competition between a VC firm or a newspaper company to invest or purchase a company. That is hilarious, especially one which we'll see created billions of dollars of returns. But anyway, so why was something, seemingly so obvious today so non-consensus back in 1997? Well, the early days of eBay were very crude. I mean, for example, I in the blog post I have a picture of their website. If you want to see it, go to allthingsvc on Substack. You can pull up the blog post and you can see some of the images that I'll talk through during this podcast, and subscribe. But so their website was this gray background, which I don't know why gray. I don't know what was wrong with white, but it's this like just off-putting gray background with just a bunch of black text like welcome to the online marketplace. We help buyers and sellers. Here's a blue link to the listings. And like that's about it. It's very, like I said, crude and not interesting and frankly kind of a turnoff. But Benchmark looked past that. Benchmark was willing to, dive into the product and poke around and see what was going on in eBay. And so what former Benchmark partner, Bob Cagle, one of the founding partners, found when he began using the product, as many eBay users discovered quickly and early on, he could find things he couldn't find anywhere else that pertained to his hobby. In this case, one of the most niche hobbies I've ever heard of, but Cagle was a collector of hand-carved fishing lures. And anyone reading this could assume it was pretty hard to find a place to purchase hand-carved fishing lures. But, like many things on eBay, Cagle found a seller based in his hometown in Michigan that sold hand-carved fishing lures. And so while Cagle lost the bid on the lure, he felt the powerful unlock of being able to buy anything he wanted from the web. And in 1997, this was revolutionary, especially for niche products, because I doubt it was even possible to get a hand-carved fishing lure in the Mountain View town where Benchmark was based. Cagle would have had to find a business that sold products like this, likely in the yellow pages, because I'm 99.9% sure any business selling hand-carved fishing lures did not have a website in 1997. And then he would have had to get his map and figure out how to drive to this obscure business, likely far from his home address. Instead, all he had to do was go online, click the link to hand-carved fishing lures. I'm sorry I'm saying that so much. Pick out whichever one he liked the most, place a bid, and see it at his door in a week or two. I mean, what an insane unlock. And Cagle recognized this unlock, while many other investors didn't, because how many people would want hand-carved fishing lures, or how many people would want Beanie Babies, another common product bought and sold on eBay at the time, or how many people would want broken laser pointers. Because yes, the first product ever sold on eBay was a broken laser pointer for 14 sorry, a broken laser pointer for $14.83. I don't know why that price is so funny to me. Probably because it's a broken laser pointer. But anyway, the founder Pierre even messaged the buyer to say, "Are you sure you want this? It's broken." And the buyer unbelievably replied, "I'm a collector of broken laser pointers." So the point is that anything could be bought on eBay from anywhere around the world. The concern that most investors had, however, was that most transactions were odd niche ones like these, and could that really scale? Benchmark's non-consensus view that eBay could build a billion-dollar business off of this niche marketplace is supported by a quote from former Benchmark partner Matt Kohler, who wasn't there at the time of the eBay investment. I think he joined around 2006 or 8. But I'd assume this concept was in the DNA of Benchmark at the time of this eBay investment. Kohler said, quote, "I think the real litmus test is if you believe that either today or in short order, there's a path for both buyers and the sellers to look at this place as the preferred place where they accomplish this transaction. Then you've got something really, really interesting." Very early on, we were lucky to be Series A investors at eBay, and early on, they built a business on the back of the fish tackle collectible vertical. Early on, if you were nerding out on stuff like duck decoys and fish tackle collectibles, it pretty early and quickly became this is the place you go to get that stuff. And that was obvious and organic and not forced, and maybe it was limited, but that was something really interesting and alive. And I think that same thing applies to a lot of the marketplace businesses that we invested in. And so, what I love about this quote is the last sentence where he says, "This is the place you go to get that stuff," creating a living marketplace. I love that term, living marketplace. And so, rather than eBay becoming a place to get books or clothes or any other generic item you could get anywhere, it became the place to get this highly specific item. So, why this is prone to scale is because it builds that reputation as the place to go for differentiated items. So, while at first it's fishing lures and beanie babies, it'll soon become trading cards and rare shoes and other unique items that millions of people are eventually looking to buy. They're going to the place with the reputation of this is where you go to get those unique things. And so, in that regard, eBay is a genius product, but an even more genius rollout plan and strategy of targeting and honing in on each individual market, each individual niche as they begin to pop up on the site, and cultivating them to host themselves on eBay as the preferred buying and selling destination. And so, why this is sustainable can be defended by another quote by current benchmark partner, Sarah Tavel, describing how an increase in customer happiness leads to a decrease in customer retention. And before I go into this quote, she mentions GMV a few times. For those who don't know, that's gross merchandise value, which is essentially in a marketplace, if you are selling shoes and there is a $100 shoe transaction between a buyer and the seller, and eBay takes a 10% cut of that sale. eBay gets $10 in revenue, but the gross merchandise value for eBay is $100, the cost of that transaction. So it doesn't go to the business, but it's a metric that marketplaces use to measure activity, if you will. So anyway, Sarah Tavel says, quote, "GMV is not to say that it's not a useful measure, but it's not a thing you want to drive towards. If you're just driving towards maximizing GMV, you're going to end up with scenarios where you're getting big numbers, but you're not actually creating any enduring value. Instead, what you want to do is focus on creating what I like to think of as happiness. Happiness to me is something that incorporates the holistic experience that you create for your buyers and your sellers. It's almost the delta in a way, the value you create and the value you capture from your marketplace. People talk about minimum viable product. What I think for marketplaces, I call that minimum viable happiness. The idea is, how do you know? We're talking about happiness. At one point, I called it the hippie version of liquidity because how do you articulate? How do you measure happiness? It must be frustrating for engineers to hear that's the optimization function, happiness. What I ended up coming down to is retention. My friend Casey Winters, who I work with at Pinterest and is now the chief product officer at Eventbrite, just a great marketplace thinker, said something when I was talking to him about happiness. He told his team that product market fit isn't when your users stop complaining, it's when they stop leaving. Again, product market fit isn't when your users stop complaining, it's when they stop leaving. I love that. And so, once again, this quote defines eBay's strategy. They weren't trying to be Macy's.com and just sell any products to maximize revenue. They were building a marketplace around satisfying a user's desire for that intensely unique product that he or she could not get anywhere else. So as a result, eBay was building both a marketplace and a community because buyers and sellers were now meeting people with the same bizarre interests as them. I mean, I'm sure there have been many instances where someone bought a unique item from a seller that spurred a conversation about their collectible hobbies, which I'm sure spurred some type of relationship. I mean, you could argue that eBay is both a niche marketplace and a niche social network in that regard. I would be really interested to see some type of data on how many friendships were made on eBay due to an incredibly unique transaction. For example, if I'm someone in Washington, D.C. who collects rare Yu Gi Oh cards, which may or may not be true, I can get connected with some seller in Mobile, Alabama, who also loves rare Yu Gi Oh cards. And we can talk about the cards we have, talk about the ones we don't have, what we want, why he's selling, and spur a conversation about it on a topic that I may or may not be scared to talk to my friends about. so And so, like Tavel said in the quote above, people were ecstatic they found a place where they could satisfy their unique hobbies physically, through the products, and mentally through the relationships that may have been created through these transactions. Again, my new friend in Mobile, Alabama, who I can talk to Yu-Gi-Oh cards about with. They became extremely happy customers and would never leave the product. And if your product has no churn, you can only grow. Again, product market fit in a marketplace is when your customers stop leaving. So if your customers aren't leaving, you're only growing. But in 1990s venture capital, which was dominated by white men and their business or engineering degrees, the word community was laughed at basically anytime it came up during a pitch. But the benchmark partner who heard Pierre Omidyar's pitch, founder of eBay, remember how frequently he used the word community, and that the users of eBay felt like they were truly a part of this unique community. I mean, they said he mentioned that word so many times. And so while many VCs at the time dismissed the idea of serving a niche community and building that community and driving the happiness of that community, Bob Cagle, again, partner at Benchmark, who had experience in the retail sector, knew how important treating customers like a community was. He knew it was a differentiated way to drive customers to your product and retain them for as long as they felt a part of that community. And so this is all great, but what about the actual numbers of the business? After all, communities and happy customers, that's great. But this business has to make, a good baseline of at least $100 million in revenue for it to be a venture backable company, for it to be $1 billion company. Well, eBay had good numbers, to say the least. By the end of 1996, which is a few months before Benchmark invested, eBay had $400,000 in monthly revenue with a 40% month over month growth rate. I mean, that's insane. That's basically doubling your revenue every 2 months. So 400,000 in monthly revenue this month, 2 months from now, 800,000. 2 months from then, 1.6 million, on and on and on. Insane growth rate. What's even crazier, maybe, actually, it's hard to tell. I don't know if that growth rate's crazier or the fact that half of their revenue was going straight to the bottom line as net income. Crazy. So 400 million, well, not yet, $400,000 in monthly revenue, $200,000 in monthly profit, growing 40% monthly. Unbelievable. So yeah, they had good numbers. They had very good numbers. And so, as a result, Benchmark invested $6.7 million in eBay for 22.1% of the company. And what's funny is eBay would never touch that money. I mean, Pierre, even at the time, knew he didn't need Bob Cagle and Benchmark's money. All he wanted was their counsel and connections, which is, again, a key reminder that VCs can't just seek out great investments. They have to be worth their price, just like the Sequoia WhatsApp example we talked about last week. And for Pierre, Benchmark was certainly worth 22.1% of eBay. What followed is one of the greatest returns in venture capital history. eBay's exponential growth continued, allowing them to go public just 1 year later in 1998. Benchmark held their stake, valued at around $150 million at the IPO, up the tech bubble before beginning to distribute shares in April of 1999, when their stake was worth $5.1 billion. $5.1 billion, nearly $10 billion when valued today. And so it's unknown exactly how much Benchmark made on their investment, since eBay stock would begin to fall dramatically a year later. But if you just look at the math real quick on a $6.7 million investment that generated $5.1 billion in value just 2 years later, don't forget about that. This is only 2 years later. You're looking at a 761 multiple on that investment and a 2,659% IRR. Again, I don't know enough information to confirm whether this is the greatest investment ever, but I would be willing to make a bet with anyone listening that it is. And wow, being non-consensus and right sure has its perks.